Folks, we had a big bull run in the markets late last week, and will it continue into the new trading week? I think that it probably will. We will be talking on this video about our top 5 favorite stocks and ETFs, and I'll give you a little bit of thought about where I think this market is going and some of the concerns I have about the market moving forward. So, before we get to it, let's talk about our sponsor. Our sponsor is over at TrendSpider. Folks, automate your technical analysis and reduce costly mistakes by using impulse buying. TrendSpider uses algorithms. Algorithms provide you the opportunity, the tools to be able to use a rules-based approach. What is that? Well, when somebody asks me that question, I go, if this, then that, meaning a stock or an ETF, whatever you're investing in, currency, cupcakes, it doesn't matter, needs to be able to qualify to earn your investment dollar. And what TrendSpider provides you is automated technical analysis, meaning automatic support and resistance levels at the click of a button. So if a stock retests a support level and or breaks out above a resistance level, well, then you can accumulate a position, because what has happened is the market has validated that what your opinion is that the stock is either going to break out or break down, whichever you're doing, buying or shorting. So they have a bunch of tools, seasonality, back testing, screeners, etc. A ton of functionality, and it's all pre-built for you. This is what's wonderful about it. So please head on over, use the discount code below, CON35, use that link and take a tour, check them out. They have a great set of tutorials here, and they have a 7-day free trial offer, and their management is awesome. They just added this. I'm just seeing this again. It reminded me, options flow. So trading bots as well. I mean, they just, every single day I come on here and they've added a new piece of functionality. So please take advantage. TrendSpider, we will be using it today. If you have any questions, please let me know. And join us tonight. Tonight is going to be Sunday Night Futures Live. We'll be giving you our opinion about where the stock market is headed in 2022. Will we continue up higher? Will we melt up into the back half of the year, or will we roll over and break down to new lower lows? So join us tonight, 6 p.m. Eastern Standard Time. Click the bell button and get reminded as to when we go live. If you're new to technical analysis, there's a link below to my 5-part video tutorial on my 5 top favorite candlestick patterns. It's free. Also, if you join that video program, again, free, you'll also get alerted 15 minutes to a half hour prior to us going live. So sign up. We hate spam too. Let's get to it. First off, how was our week last week? Why are you listening to me? Well, our week last week was simply awesome. What we do here is we swing trade and we do a lot of cash flow strategies using options. And last week we did earnings trades on Disney, CMG, Chipotle Mexican Grill. That was a managed trade from the prior week, but we did book profits there. NUGT, we sold some covered calls. We sold, as a matter of fact, we did a straddle. A straddle is the simultaneous sale of a call and a put on the same strike, expiring the same date. And we made money on both sides of that position because we closed them out. We managed them each leg differently. Illumina caused us a little bit of a headache, but we managed it, and we pretty much scratched that trade. Valero, we're still in that trade. We rolled that. That was an earnings trade. We're profitable on that one right now. Here's our profit taking on Nugget, NUGT, and that's pretty much it. It was a really good week last week, and I suspect that it will continue moving forward. Okay, let's get to it. So what we're going to do is we're going to go over my top 5 stocks / ETFs. They will be, this is a new one for me. This is EMXC. This is going to be a replacement to EDC, which is an emerging market ETF, and I'm going to share with you why I'm being overly particular here. The reason is that while I love Chinese food, I like Chinese people, I hate the Chinese Communist Party. Why does that matter? Well, EDC is an emerging market ETF that puts you long of emerging markets. I think emerging markets are going to do very well as the US dollar contracts. Now, the problem with the EDC is that it's 30% mainland China. What's the problem with that? Well, if you own a Russian ETF, how's that doing for you? And with all of the drama taking place over in the South China Sea, the Taiwan Straits, way too much risk to put on a China trade, besides the fact that, frankly, the CCP, they're your senior partner with your trades if you buy a Chinese stock, and I want no part of that. I want to manage my own position. So I'm looking for emerging market ETFs that have no China exposure. So that way, if sanctions are placed on China, or if they decide to shut down this, the stocks in that country, and look at Didi, they've been sanctioned time and time again by their own government immediately after their IPO. That's why we avoid these types of stocks and markets. So since I rolled into this immediately, which was not my intent, let's begin with EMXC again, emerging markets, ex-China. Okay, so all of these trades are listed in the members area of the Contrarian Trader 14-day free trial offer if you're interested in joining up. I provide the price targets, the entry points, and your stop loss point. It's already in the members area. So members, check it out if you're interested. And if you're not a member, again, 14-day free trial offer. All right, so EMXC, what we do here using TrendSpider is we use a multi-time frame analytical approach. What does that mean? What it means is that we first look at the macro. We look at the battlefield from a 100,000-foot view, monthly charts, weekly charts, daily charts. For our purposes right now, we're going to look at weekly and daily charts. So EMXC, a really good week last week. You have some moving averages which are declining. It's going to act as a bit of a resistance. But overall, we're looking very good here because we have broken out. How do I know that? Call it my eye. I don't need to put trend lines down all the time. I will in a moment, and I'll show you. Before we do that, though, RSI has bottomed out, higher lows, moving higher, stochastics, double bottom setup, moving higher. Why does this matter? You want these momentum indicators to be moving higher if you're looking to get long of a position. Now, in terms of price, we broke out last week above resistance, and there you go. So this is what I meant before, where we broke out, and now we've drawn our trend line. So this is a very, very healthy breakout. Now, moving on to a daily chart, we're looking very good here. You do have some, let's overlay some resistance lines here. Yeah, and support lines, I should say. You can see that, click of a button, the automated trend lines come up. We had broken out above resistance here, line in blue. And I think what we're going to do is we're going to do a retest of this breakout point. On that retest of a breakout point, we could either A, buy the common stock. I'm not sure whether or not it's optionable. Let's check it out. And the shares are optionable. So we can buy options on this if we choose to. We could sell options on it if we choose to. The question that immediately comes to mind are the options expensive or are they cheap? Well, when you're trying to make that determination, what you look for is current IV percentile. So what this means is that over the course of the past 52 weeks, are you at the midpoint of the price range of the options, meaning has implied volatility expanded, making options more expensive, or has it contracted, making them cheap? I use a 50 measure. Any read above 50 makes this option expensive. In this case here, it's at a 40 IV percentile, meaning that they're not necessarily cheap, but they're not expensive either. If you're looking for a cheap option, you could go to the Tues, and you could take a look there, and you can see that the options are with a 21 percentile IV percentile. So they're cheap. So just to put things into perspective. Now, going back to the chart, what's the trade here? Well, it could be any one of a number of different types of trade. We could buy the shares outright, which is fine. If I wanted to average down my basis cost, I could sell a naked put right at support immediately below in blue, or I can open up what you call a bull spread. What does that mean? What it means is that I buy a deep in the money call option, like a 70 delta, meaning that it moves 70% for each dollar move of the underlying. So if EMXC moves $1, well, that option moves 70 cents. So I buy that option and I sell a deep out of the money call option. And what that does is that it helps finance the trade. So I'm long, but I'm kind of long synthetically, and it reduces the amount of buying power coming out of my account versus buying the common shares. So this is a trade that I can go either way with. I could probably do all three, to be honest with you, and still be very happy being long of this trade. What must happen here? The dollar needs to weaken. The reason why you're seeing EMXC and a lot of emerging markets break out now, BRZU, whatever you want to look at, is because the US dollar is weakening up. So that's setting the stage for emerging markets to rally up higher. Now, moving on to a beautiful, beautiful breakout last week. This is an ETF, another ETF, which is the semiconductor holders. Now, you could buy individual stocks, which is fine, but the semiconductor holders did a beautiful thing last week. And what that beautiful thing was is that they flashed a bullish key reversal bar. So if you're not familiar with the terminology I'm using, a bullish key reversal bar is one of my top 5 favorite candlestick patterns. One of the patterns I talk about in my 5-part video tutorial, link below, free. The candlestick here would imply that we are going to move up higher. Now, to be fair, you could see here in green that I have a trend line. This trend line is going to act as a bit of resistance. So, would I go on Monday morning buying the semiconductor holders? Probably not. I think this is a classic case of where you would want to use an option strategy, meaning rather than buying, and again, you can see the trend line here in green. This is not drawn by me. That's the algorithm. I'm going to click the button, take it off, put it back on, put it back on. There you go. All right, so you can see that we close right into resistance. I would like to sell a naked put here. I think that that's the best strategy, or wait for the breakout above this upper band of resistance in green. Selling a naked put averages down your basis cost. Or another way to play it is to purchase a small amount of the SMH and sell a covered call immediately against it. The problem with that is that to sell a covered call, you need to own 100 shares. This is not a cheap stock. It's $245. Most people don't have that kind of capital. So while I could do that, it's probably not my first choice. I would rather sell a naked put and have the shares assigned to me at a lower price point. That way I get a discount on the trade. So that's the ideal way to trade this stock. Now, I could do that. And what if the shares just continue up higher? And that's fine. I could wait for the breakout above this upper band of resistance in green and begin accumulating the common shares as well. The key is don't get too big with selling a naked put, because you want to have capital available to you to do other things or buy the common shares if they begin to break out. So again, I have price targets, I have entry points, and I have stop loss points listed in the members area. So if you're not currently a member, please sign up and get the 14-day free trial offer and go check out those targets. Now, moving on to OXY. OXY is our next stock. This is a energy play. And again, we always begin with a higher level view. And what you're looking at here is a really, really strong chart. I believe Warren Buffett's been buying this. And you can see that on the week last week, that we broke out above this upper band of resistance. Very, very strong price action. And our RSI and our stochastics, again, momentum indicators. These are forward-looking indicators. They are moving up higher, looking very strong. So we have a breakout on price. We have RSI and stochastic behaving very, very well. So from a weekly perspective, it looks as though we're going to have a continuation breakout on Occidental Petroleum. Daily chart. On a daily basis, on Thursday, we broke out above this upper band of resistance. On Friday, we came close to doing a little bit of a retest. What I'd like to do here is set an alert. And what that'll do is allow me to identify that OXY, and this is where I go back to when I spoke earlier about a rules-based approach. If this, then that. If OXY pulls back and does a retest of this breakout point, well, if it does that and it holds it, it closes above that by the end of business on Monday, well, I can go opening a position on Occidental. So we want to set an alert, and by not chasing a stock in this very temperamental market environment, we stay safe. And there you go. Our alert's set. And you can see here that our alert is set. Let's check out seasonality on Occidental. We want to go back. Let's go back to 2011. And that'll give us a bunch of data to work with. Now, oddly enough, while we're breaking out in the month of August, what the seasonality feature on TrendSpider is showing us is that August is the weakest month out of the year. So that's valuable information. This data goes back 12 years, so it's significant. So what we want to do here is keep this in the back of our mind. Obviously, the seasonality factor is something that we want to pay attention to, but the price action is more important. It appears as though we are going to move up in the month of August, assuming that we hold that breakout point that I just set the alert at. So OXY looking very good here, at least from a technical perspective, not from a seasonality perspective. I'm not here to blow sunshine up anybody's you-know-what. So we always want to take into consideration all factors before we get long of any one trade. So Occidental technically looking strong, seasonality in the back of our mind, a little bit of a concern. Not too much, though. Now, moving on to AutoNation, AN, the symbol. Now, I was very surprised to see this one come up on my screener, but it did, given the fact that you have a used car bubble, and that should be noted. There is a used car bubble. Take a look at the chart of Carvana, damaged goods. But AutoNation is looking very, very strong. Again, we're beginning with a weekly chart, and you can see that, again, using the automated trend lines on TrendSpider. Take them off, put them back on. We broke out above a couple of resistance levels last week. So this chart is looking very good. And when you take a look at RSI, what's it doing? It's putting in higher lows. What's our stochastic doing? Again, higher lows. Exactly what you want it to do. So from a macro perspective, that 100,000 foot view of the battlefield using weekly and monthly charts, well, we're breaking out. The trend is up. We validated it. Now we take a look at the daily chart, and we use the daily chart to try to time our trades. And this is the value of the automated trend lines. I looked at this chart only so briefly before I started recording and entering my price targets and entry points in the members area. And you can see that we are at resistance on a daily time frame. We tried to break through it 3 times over the past 2 weeks. Here, August the 8th, 10th, 11th, 12th. Each time it's failed. So keeping in the back of our mind that we have resistance immediately above, we need to be very cautious that it's failed to break through it on several occasions. Volume on Friday, the upside was not wonderful. So I would love to buy the stock due to the fact that the weekly chart looks so good. However, we can't because we haven't broken out above resistance on a daily time frame. What's the shot here? What's the play? Simple. Create an alert. We want to wait for a breakout. I don't want any sensitivity, meaning it's in the range of our price target. I only care about if it closes above our price target. And if it does, by the end of business on Monday, Tuesday, whenever, we can get long of the shares. And there are alerts set. Set it and forget it. So if we break out on AutoNation, well, then we can open up a long trade. We can definitely use the common stock here. It's a triple-digit stock, so this is one where You know, if it's not breaking out immediately, we know there's a weekly breakout. I could sell puts. That's a way to average down basis calls. When people hear puts and they think negatively, meaning it's a negative trade. It's not if you're selling them. If you're buying them, you're bearish. If you're selling them, you're bullish. So I would finance options down at the 120 strike, and that would be a good way to enter this trade, at least from a cash flow perspective. You could generate cash flow. It may not ever hit it, but if you wanted to sell a few contracts, I would go with the weeklies, and if they're available, I'm not sure if they're available yet, and try to generate some cash flow. Now, I would stay small with that trade because I don't want to tie up too much capital with the puts, because if we break out, I want the ability to buy the common shares. So if we break out, definitely want to buy the common stock on AutoNation, or as I mentioned earlier, you could buy a bull spread using options. RSI, strong. Stokes, strong. Nothing not to like here. Last chart that we're going to look at today is Tesla. Now, Tesla on the week last week flashed a really nice bullish key reversal. Again, one of my top 5 favorite candlestick patterns. Link below, 5-part video tutorial. We did not close at the highs of the week. I would have liked to have seen that, but we have clearly displayed a breakout. We broke out the week of July the 25th. Last week, what did we do? We retested the breakout point at 839.38, pretty much to the penny. Now, that is a very bullish setup. So with Tesla, this is clearly a stock where I wouldn't go buying the common shares for several reasons. One, it'll eat up way too much buying power. I would rather sell premium here, probably a strangle, sell a out of the money call contract, and simultaneously sell a out of the money put contract. Another way to trade it would be to buy a bull spread. Again, as a reminder, I've said this a few times, bull spread, let me remind what that is. A bull spread is a purchase of a deep in the money call contract, a 70 delta, and the simultaneous sale of a deep out of the money call contract, and that helps finance the trade. So the delta there would be between 20 and a 30 delta on that sale of the option. So net, you're long of Tesla synthetically rather than owning the shares outright. So this is an expensive stock. Now, I'm not just talking in terms of dollar terms. Yes, it's a lot of money to lay out there, but the PE is like over 100 here. So what that helps do by using call options, the purchase of them anyway, is it makes it a defined risk trade where using far less capital to get involved with Tesla to get long of it. And what you're avoiding is a binary event, meaning if they get a massive downgrade or the CFO leaves immediately, some crazy thing like that, you avoid huge downside losses on a very expensive stock, and you're managing your account. And that's the reason why a lot of people get in trouble in trading, is that they get too big in a trade and they get hurt. So what we like to do is we like to define our risk and sometimes take undefined risk, but we have strategies to make sure that we kind of stay out of trouble. In this case here, I would definitely use a defined risk strategy to get net long of it using options, or if you want to use an undefined risk, use a, here, I'll show you. It's an undefined risk strategy. However, you're using the probabilities to ensure that the probability of profit, also known as POP, is very, very high. So here's Tesla. Tesla appears as though, this is a 30-minute chart, it looks like it wants to move up higher. Now, what we'll do is we'll go to the Analyze tab, and you can see here, I have it set for 75.27% probability of trading out of the money. So I could sell a weekly option, a call option, 986 strike, and also sell a 824 put that creates the strangle. So my probability of making money there is greater than 75%. So that's when you want to put on an undefined risk. The probabilities of profit are far greater for you as an option seller. Or you could simply do, as I said earlier, buy a bull spread and get long of the shares using options. And that's it, folks. Folks, if you're new to me, just watching this, join us tonight, Sunday Night Futures Live. Click that notification bell. If you want to get reminded 15 minutes to a half hour prior to us going live, use the link below where it says 5-part video tutorial, my 5 top favorite candlestick patterns. You'll get alerted as well as to when we go live, 15 minutes to a half hour. Don't forget, take advantage of TrendSpider. They are the top pick by Trading Reviews and Stock Screener. They were awarded the best technical scanner, and I agree. They have a host of reviews here. Use the link below, 35% discount code below, and hopefully you'll join in tonight. Please say hello. Everybody have an awesome Sunday, and I'll talk to you tonight. Be well.